So before proceeding, I would like to mention that some of the areas cabinet decisions are awaited. Some more clarifications are awaited. So uh, we have to wait for those clarification before fully interpreting the clauses and certain areas. Once we get this cabinet decision, then only we'll get clarity. One of them is the free zone qualifying free zone companies. So these that's why. So this disclaimer and this presentation is prepared based on this federal decree law issued by the Ministry on Corporate Tax, and there is FAQs published by Ministry of Finance, and there is also explanatory guide issued by Ministry of Finance, and there are various cabinet decisions that have come very recently in last few days, and also CT registration manual. So almost all these publications are available on the Ministry of Finance site. So any of these publications or any cabinet decisions, any um, explanatory guides or cabinet decision decree law, if you need anything, we can send it to you separately. But most of them are available on the website. Okay, coming back to this corporate tax, what is corporate tax? These are the questions I have faced from many of my clients. Most of them, whatever question they are asking, I've just listed that. I think most of you must be having these questions in your mind. So if you have any of these questions are answered in my presentation. I'll try to explain such a way that most of your questions are already covered in the presentation. So first question, when is it starting? Second is the free zone companies. Ours is a free zone company, whether we have to pay tax or do we have to register. So how this corporate tax is calculated, and tax is on the profit. What if there is a loss? And many of businesses, they have two licenses, maybe more than two licenses. One in Dubai, one is Sharjah, one in Ajman, like that. So how do we file? Do we have to file separately or can file one return? Another question is, we have one VAT group. So can we use the same VAT group while filing the tax return, corporate tax return? So multiple businesses under sole establishment. Sole establishment is also another question. And one more question, you have license, but you are not doing any commercial transactions. It is dormant. Do I have to register? The small business category, FTA has announced up to 3 million, you come under small business category. So they have given exemption for 3 years. So do we have to register or no? And some clients ask that they are not doing any business in UAE. They are buying and selling outside UAE, like out of scope in VAT. So in such case, is their income taxable? So what about branches? What about subsidiaries? What about the salary by owner? How much salary we can take? And what about the salary I receive, dividend I receive, any interest I receive, whether they are taxable or not? So these are the common questions I faced in the market. So that's why I have listed all these questions. We'll try to answer one by one. So the first question, when will the city regime become effective? So you must have read in the newspapers that it is coming from 1st June 2023. But for your information, it is coming into effect from 1st June 23, but you may not fall under tax regime immediately. So as per the regulation, what they say, CT regime will become effective for financial year starting on or after 1st June 23. So I have given a table. If your financial year is July to June, then you will come under UAE tax regime from 1st July, and your financial tax period will be July 23 to June 24. And the tax return you have to file after 9 months. That will be 31st March 25. So there are some companies that follow October, September. Then if you follow October, September, then your first financial year starts from 1st October 23, ends on 30th September 24, and your return again after 9 months. So most of the companies in UAE follow Jan, December. So most of the companies come under tax purview from 1st January 24, and 30th September 25 is the tax filing date. And suppose if you are following April, March, you will start a corporate tax regime from 1st April 24. And then the return filing date is 31st December 25. Now the question is, which financial year we can follow? So in the regulation, what they said, by default, it is Gregorian calendar, which is Jan to December. But if you are preparing financial statements for a different period, suppose you are following April, March, you can opt for April, March. And in many LLC companies, your financial year is mentioned in your memorandum. So that since that is a legal document, you can follow that financial year. So this is a clarification about the financial year. So again, the question is, if I have a license, but I am not doing activities, my company is dormant, do I have to register? Yes, the answer is yes, you have to register. So in my presentation, I have tried to give some references of the article numbers and this FAQs, frequently asked questions, published by ministry. So these questions reference numbers I have given. If anybody wants to check, they can read that question and answer given in the FAQs. So one more question, can I change my financial year? They have given a facility if you want to change the financial year for some reason. For example, you have a company, parent company in India, they follow April, March. If you want to change from Jan to December, April, March, whether it is possible. So they are facilitating that it is possible, but there should be a valid reason. Just because you want to delay, you should not opt for that. You have to give a reason. So suppose if you are closing a company, your calendar year January, December, you want in case of liquidation, you are closing by September. You can say that my financial year will be Jan, December. Then after that, sorry, Jan, September, I will close. Second reason is aligning financial with your group company. Within UAE also you have a company, group company that follows April, March. Now you are following Jan, December. So if you want to align, if you want to have group companies to follow same financial year, you can change. So there is a third is there should be a valid commercial reason. What are the conditions? You have to apply within 6 months from the current tax period. Application can be for extension or shortening. You can shorten also. In case of shortening, you cannot do for current year. You have to do for next year. So I have given a table where it is some illustration. Yours is January, first case, January to December. You want to convert to July to June. So then it becomes January to June. First year is allowed, 18 months it is allowed. But if you want to shorten the period, so you have to complete the first year, April to March. So next year you can apply to shorten your. So then next year, suppose you want to follow Jan to December. Okay. So, sorry, you're following April to March and then you want to shorten. So then you can do it only next year after completing first March. Then first year will be 25 April 25 to December 25, which will be 9 months. Then after that, you will follow Jan December regularly. It will be 12 months. So like these examples I have given. So just to make you understand how to change the financial year, what is out of the conditions, what is the procedure. And applicability is also a question is, this is applicable for which type of companies? Applicable to who? So it is applicable to residents. Obviously, if you have a company, juridical person is a company. If you have a license, it is applicable. And second case, there is a foreign company which is managed from UAE. Then that is called having place of effective management, permanent establishment. Then you are covered. A natural person who conducts business. Recently, there is a cabinet decision. I will cover this more detail in the next slides, coming slides. Any other person, the cabinet decision, any other person as may be determined the cabinet decision. So, non-resident person example is you have a company in India, but they are doing some business through an agent here. So, those categories are called non-resident person having a permanent establishment. So they will be taxed. So it is a very detailed topic, very big subject. But for this presentation, you have to understand that a non-resident person who has a permanent establishment and place of effective management, then they have to register for VAT and they have to comply with, sorry, they have to register for corporate tax and they have to comply with the corporate tax regulations. So now the question is branch. So many people ask, so I have a license in Dubai, but I have a branch in Sharjah. So do I have to register separately? So branch is not considered as a separate entity. Branch is registered. Branch has to be um, is registered along with the parent company. So you don't have to register separately. You don't have to show separate income for branch, separate information or financial for the branch. So regarding individuals, it's mentioned that salaries is not taxable, and if they earn dividend, it is not taxable. And recent cabinet decision says if you invest in real estate in your individual capacity, whatever income you earn, it is not taxable. So move on to again. Here branches I'm discussing in detail because these branches of foreign entities or UAE companies having foreign branches. So this is always a question, and the question is the simple rule is that if you have a branch within UAE, I already explained it will be part of your parent company. But if a UAE entity has a foreign branch, the the rule is that if your foreign branch is taxed outside, you can show the proof, and then you can claim an exemption from here, from UAE. So either it has to be taxed in UAE or it has to be taxed in foreign country. So if you have to include it here, you don't have to do anything. But if you have to exclude it here, you have to show the proof that it is taxed outside UAE, and whatever tax you paid, you can take tax credit. If you are including it in your parent company, you can take tax credit from the tax that you paid outside the country. Same way, a foreign company has a branch in UAE. So we don't know the rule of that foreign country. So if the branch in UAE is taxed in the foreign country, you can show that proof that you are already taxed in foreign country and you can claim exemption in UAE. So this is about the branches, but a subsidiary is different from branches. Subsidiary is like a is a independent entity, not like a branch. The branch is like parent and child, head office, and branch is like parent and child. But subsidiary is not like a child; it is an independent entity. Again, if the 100% subsidiary, if it is taxed outside UAE, you can apply for exemption in UAE. The small business relief, this is talk of the town. I think most of you may have these questions on this small business relief. What is small business relief? So the government has declared those who are making a sale of up to 3 million, they are considered a small business relief. So for 3 years till December 26, they are given exemption from corporate tax, that you don't have to basically pay any taxes up to 31st December. But there are some advantages and disadvantages. If you don't avail this exemption, if your company has any loss, you can carry forward and set off against next year profit. But you avail this benefit, you will not be able to carry forward the loss. So this is one condition. These are the two conditions. But a lot of people ask question, even now many people are asking, do we have to register? Our turnover is less than 3 million. Do we have to register? The answer is yes. You have to register and maintain records, file return, and otherwise how the government will know that your earnings is less than 3 million or more than 3 million. You are, for all practical purposes, you are a taxable person. But government is giving exemption till 31st December 26. After 31st December 26, you will become a normal taxable payer. But one condition is they are giving exemption up to December 26, so practically 3 years. But you registered in 24 when your income is less than 3 million. But in 25, it crossed 3 million. Then you will lose this exemption. Then again in 26, if you are falling below 3 million, again you have to apply. So that is why they said it is going to be every year, all the 3 years, if you are below 3 million, then you will continue to avail this exemption every year. So one more relief that is given for a small business is you can maintain accounts on cash basis. So cash basis is that whenever you receive income, that on that time only you will account for it. But if you follow cash basis, where it may contradict with VAT regulations that says within 14 days of supply of service you have to raise an invoice. So these things one has to evaluate whether which is the best option, and you have to study your business model and see how this can be implemented. Now natural person again is another big question that cabinet decision came recently. If you are a natural person doing business up to 1 million, you don't come under corporate tax bracket. So who is a natural person doing business? One clarification I want to give: a single owner LLC or single owner free zone company, they are not treated as natural person. Natural person is sole establishment where it is written on your license. The difference between LLC and natural person sole establishment is, in the case of LLC, the liability is limited. In the case of sole establishment, it is considered as the individual is carrying on business in his own capacity, not as a company. So that is the acid test. So civil companies also come under sole established natural person. So one more question: a natural person can have different licenses. So how do we file? So the clarification: natural person will file only one return, like VAT. Even if you have 3 licenses, 4 licenses, there will be one return. That is a clarification. Individual earning business income outside India, the clarification that will be clubbed with your income. So these FAQs I have given references. One can refer the FAQ book where these clarifications are given. You don't find this clarification in the decree law. Now little more elaboration on the natural person. So natural person who is earning from business activity. So first we will cover this left side. So anybody is doing business activity, many people, they are in the service industry. They do business as an individual. So up to 1 million turnover, corporate tax is not applicable. But more than 1 million, corporate tax is applicable. But if it is more than 1 million, up to 3 million, they can avail the small business relief. So They, in the sense they get this advantage. But more than 3 million, they are like any other company. They have to comply with tax regulations. Then they have to pay taxes. So natural business, this is on the left side. This is regarding natural person who is earning business income. On the right side, natural person earning from non-business activity. What is non-business activity? They have defined in the cabinet decision 49. You can refer. I have this cabinet decision on my screen. If required by any of the participant, I can share, or we can forward this. So what they clarified, if a natural person is earning salary, it is not a business income. If a natural person has invested somewhere in personal investment, let us say in bonds, in deposits, whatever he is earning, it is not treated as business income. Third most important is that real estate income. So if a natural person buys properties and rents the property, he earns rental income. So the law says it will not be treated as a business income. Similarly, you buy a property, sell a property, you make money, so that is not treated as real estate income. I mean, that is not treated as a business income. So this is applicable only from your personal investment if you are buying and selling. So they said irrespective of the volume. So many people ask, let us say if I am earning 10 million revenue per annum from a real estate income, still the law is giving exemption because you are an individual, you are not a company. So hope this slide is clear on the natural person. So one interesting question somebody asked me, if I have real estate property in company, I have to pay tax. If I have real estate property in my individual name, I don't have to pay tax. So why I should have real estate property in company name? I'll transfer to my personal name. It is allowed, you can do it. But company has some advantage compared with individual. For example, if you hold property in company, maybe you can claim depreciation. You have staff in your real estate company to manage, you can claim their expenses. So what is to be remembered is what is taxed is net profit, not the revenue. If you are earning 1 million revenue from rental income, you will have expenses. The depreciation is expenses. Maintenance is an expenditure. If you have staff to maintain this building, there is an expenditure. So after all calculation, if your income is more than 375,000, then only you are taxed. So one has to see a case to case basis, which is more advantageous. So there is nothing like one general rule that if you transfer it to your individual name, you will get exemption. Suppose if you have 100 properties, to manage this, you need staff, correct? So then you have to see which is more advantage, which is more manageable. In civil companies, there will be more than one partner. So in such case, how do we do? So the interpretation of law is again, you have to divide the income between the partners and see individuals' income to arrive at the threshold. That is the interpretation that can be drawn. Okay, one more question. This is just I'll quickly give an example. A lot of people ask VAT is 15%, corporate tax is 9%. So total we are, sorry, VAT is 5%, corporate tax is 9%. So we are paying 14%, which is not right. VAT is not your income nor your expenditure. You are charging VAT to your customer and you are paying to the government. And whatever you are paying to the supplier, you are setting up. So VAT is payable on the revenue, corporate tax is payable on the net profit. This right hand side, just I gave an example. For example, if you make 1 million profit, what is your tax? So 1 million profit you make, you get the 375,000 is the threshold. I think that I have mentioned in my subsequent slide. Up to 375,000, there is no tax. So 1 million minus 375,000 is 625,000. So 9% on 625,000 is 56,250. If you make 1 million profit, the tax what you pay is 56,250, which works out to 0.56% of your revenue if the revenue is 10 million. Yeah, tax rate. What is the tax rate I have given in this slide? 9% is the tax rate over and above 375,000. Maybe this slide should have come before. Nevertheless, so if it's a free zone company, it will be 0%. But when I say free zone company, not to all the free zone companies. So this is discussed in the subsequent slides. Not all the free zone companies get exemption. So there are some conditions, and some conditions are still awaited from the ministry. Who will be qualified as a qualifying free zone company. So these are the tax rates. Now, how we calculate income? It's basically there are some expenses that are not allowed. These are some expenses that are not allowed as expensive. While calculating taxable profit, they have mentioned that till today we have our management accounts where we book lot of things. For us, profit is after booking all the expenses what we think are business expenses. But from taxation point of view, from government point of view, certain expenses they don't treat as business expenditure. So the examples are, you give any donations, gifts, they are not treated as expenditure. You pay fines, penalties. You pay fines and penalties, they are not treated as business expenses. Bribes you are giving, not business expenses. If you pay dividend to your shareholder, it is not an expenditure because dividend is paid out of profits. And a natural person withdraws money from his business, then it is not an expenditure. The tax you pay, corporate tax you pay, and you say that it is my expenditure for next year, that is not correct. That won't be allowed. Tax is paid on the profits. It is not an expenditure. So then quickly going through input tax. You buy something, then you pay VAT, and you claim input VAT. That is not an expenditure. But any expenditure, if you cannot claim input VAT, you can treat it as an expenditure. So any tax you pay outside UAE and you cannot treat it as an expenditure. Coming to entertainment expenditure, they said they will allow 50% of entertainment expenditure. That includes hotel expenses, your food bills to the entertainment you provided to your customers, any guests you provide. If you spend 100 dirham, the government will allow you to claim 50 dirham. Coming to interest calculation, you need to do some calculation to know your eligibility. So they say 30% of your profit before tax will be allowed as expenditure. Sometimes your interest may be very high, but what they do, they allow up to 30% of your profit as interest expenditure. So that I have explained in the subsequent slide with calculation. So this one has to keep in mind. One more thing, very important thing is related party transactions. So there is a lot of material in these slides, but I will just explain you the gist because going through these slides paragraph by paragraph, it will take time. So in any tax regime, what happens if you have group of companies and one company is making profit, one company is making loss, or one company is making less profit, there is a tendency to transfer some income from high profit making company to low profit making company. Some expenses of low profit making company to high profit making company. Why do we do that? Suppose I have a company in Abu Dhabi which is in loss. and I have a company in Dubai that is making 1 million profit. What I do, I'll transfer, I means basically people who wants to avoid tax. What they do that they transfer some revenue to their group company. So that a company which is making a loss, even if you transfer 100, 200,000, it will be still below 375,000. If the company is making a loss, you can transfer up to 375,000. Similarly, the company is making loss. If you transfer 200,000 expenditure from loss making company to profit making company, then also you will reduce the tax burden on the profit making company. So the simple golden rule is any payment you make to a related party, it should be as per the market price. One more example is that because the company is making profit, the directors want to take more salary. So salary is not taxable. So I will say that I am the director, I will start taking 100,000 salary because there is no restriction. So those things will be discouraged because what they say, first of all, you have to understand who are the related parties. Related parties means anybody who have 50% or more interest in the company, either by way of ownership or by way of control in the company. And anybody who is related to these persons who have more than 50%, they are called connected persons. One example is like my father is a shareholder in a company with more than 50% stake. I am not a shareholder. So if a company pays to me for anything, that means I am a connected person. So there is a chance of an attempt to reduce the profit. Like I am a consultant, so the company will pay me a fees 10,000 dirham, where if it is given to somebody else, they have to pay only 5,000. So that means anything paid to any connected person, it should be as per the market price. How do we determine market price? How do we know? So that is a big topic, transfer pricing, all those things. Even suppose if you have a company in Dubai and you have a company in Abu Dhabi, you are selling goods. So arm's length transaction, what we call is arm's length transaction. I'm skipping slides for you to make understand what is arm's length transaction, because you will get to hear this question very often once you start a tax regime. What they say, if I sell one item to a third party at 100, so I should be selling to my relative or my connected person at the same price. That is called arm's length. For example, if I sell at 110 or at 80, that is not arm's length. So why they brought these rules? Because there is a tendency to reduce the taxable profits by shifting some income here and there, or by shifting some expenses here and there. So those are called arm's length transactions and payment to connected persons. Now, who are the connected persons? They have given a definition. If it is a natural person, up to fourth degree of relationship, like father, mother, son, daughter, son's daughters and son's daughter's daughter, then uncle, aunt, then cousins. So they have not left anyone. Anybody who is related. So I am a director, I am a shareholder in one company. If I make any payment to anybody who comes under this category, that is treated as payment to related party. Similarly, natural person to company. Natural person to company is somebody who is having 50% interest, ownership interest or more. It is called, they are treated as a related party. Company to company, one company is having more than 50% stake in another company, so they are treated as related parties. So there is a chance of shifting profit and expenses from one company to one company. Best example is I am a owner in Dubai company and I have another company in Dubai, Abu Dhabi. So we are connected persons, we are related parties. So these transactions have to be as per the market price. So what is control is explained here, because many people say our license is 51% local, I am 49%, so I fall below 50%. So that is not correct, because you are the manager, you have the power to control the business. So then you are treated as a person having control on the business. Arm's length I have explained. So what happens if tax authorities find that there is a profit shifting happen? So they will do adjustment to your profit. How they do adjustment? 100 dirham item I sold at, let us say, 80 dirham to my group company. So that 20 dirham they will add back to your profit, and 20 dirham they will treat as, they will add back to the expense of your group company. So adjustment will be done in both the places. So what type of transactions come under arm's length? All this. It can be sale of goods, sale of services, cost sharing, support services, management charges. Cost sharing means in one office, three companies are sharing. So how do you allocate cost? So what I will do, I will allocate more cost to a company that is making more profit. So these things are treated as group company, I mean arm's length transaction. So I've given an example. I think we are running little short of time, but I'll try to cover as much as possible. This example I have just given what I explained. One market price of one product is 15,000. So um, my company B is making loss. What I will do, or it is making less profit, it is below 375,000. 15,000 item I'll sell to 10,000. So what happens? My profit will be reduced by 5,000. So 5,000 means 9% on 5,000 I am saving. So by shifting this profit here, the company B is still not paying tax because they are below 375,000. So these kind of things happens. That is why payment to related parties come under transfer pricing and arm's length transaction. So payment to directors. So the question is, should the directors owner not take salary? So this is one more area that is pending for clarification. We are hoping that government will give a clarification on this. But in the law, they said whatever is paid, this is what they said. Payment or benefits provided by business to its connected person will be detectable only if the business can demonstrate that the payment or benefit corresponds with the market value of the service provided, and it is incurred wholly and exclusively for the purpose of business. So whatever expenditure, first of all, it should be for your business. Second, it should be as per the market price. So certain categories are given as exempt income, like we already discussed, exempt dividends, salaries, everything is exempt. Now the question is, dividend as a person it is exempt, but one company having shares in another company, is it exempt? So what they say in UAE, dividend will be totally exempt even if one company is earning dividend from another company, because dividend is paid out of profits. So both the companies are taxed already. So there is no problem. It won't be taxed again. But if it is a foreign company, you should have at least 5% equity in that foreign company. Then only you will get exemption. So this needs a little more elaboration. If anybody wants clarification on this, I can connect offline and give clarification. So this slide, I think I request you to pay attention. This slide I have shown how tax authorities will calculate profit. On the left hand side is what my books show. My books show that I made a profit of 500,000 and I get a limit of 375,000, and my profit is only one taxable profit on 25,000, then I'll pay only 11,000, 9% of 11,000. But tax authority says, okay, let us look at your books. So partner salary you have taken, which is more than market value, 50,000. So you add this 50,000 to your profit of 500,000. Entertainment expenses you booked 40,000. So that 20,000 we will not allow. 20,000 we'll add it back. Prior period expenses, normally the 2020 expenses, some bill you receive and you pay now, it won't be allowed. Then income tax you paid, then you want to treat it as an expenditure, don't allow. And you filed VAT return late or something happened, you got a penalty, 5,000. Penalties are not treated as expenditure. Penalties what you pay for violation of law or for not complying with law. So that is not an expenditure. And any provisions you make which is not incurred, it won't be treated as expenditure. Interest and depreciation is interesting. Interest, I told you, 30% of profit only will be allowed. For that, you have to add back profit. Then you add back interest, 450,000. Suppose your interest is 450,000. So first you add back and also depreciation, whatever you charge, you will add back. Now you get profit before depreciation and interest. Now you 30% of this profit is only allowed as interest. So 30% of this is 391,000. What you claimed is 450,000. So what they are doing, they are adding 450,000 here, they are deducting 391,000. So effectively, they are disallowing the difference between 450,000 and 391,000. Only the extent which is not allowed, they are adding back. Similarly, depreciation, you deducted 200,000, but the law says you can claim only 150,000. So they will add back 200,000, they deduct 150,000. So effectively, they are disallowing 50,000. So they do all this calculation. They say that according to us, the profit is 763,000, not 500,000. So you deduct 375,000 from here, and your taxable profit is 388,000 according to us, not 125,000 you calculated. You pay tax 9% on this. So 34,965 is what they calculate, and 11,250 what you get. This is going to be yearly affair for you people, for all the businesses. This is how it is going to work. There's always a tussle between the taxpayer and the income tax authorities. So you have to, this is how the tax assessment is done. For you to have an idea, I have given this example. Moving on to the next slide. Now transition rules means now before starting of corporate tax regime, what you have to do. So they have mentioned that you have to have an opening balance sheet. Suppose you are coming under tax purview from January 24, you should have 31st December 2023 books prepared as per arm's length transaction and arm's length principle. So that may be asked by FTA anytime. You don't have to submit, but you have to keep it. When they ask, you have to show. So that means what? The 23 balance sheet, 23 financials are going to be a benchmark for 2024. They are going to compare. So 23 you made 5 million profit, and 24 suddenly your profit is 500,000. So how it can happen? So that is why transition rules means you have to have a opening balance sheet when you start the tax regime. So the recent notification says profit is whether audit is mandatory. If your turnover is more than 50 million, it's mandatory. And if you are a free zone company qualifying for zero rate, you are taxable. I mean, audit is mandatory. So we will quickly go through free zones because I think the time is little short. The free zone, basically, this is explained in these 5 steps. This is given in the draft, consultation draft. We are still waiting for a cabinet decision on this, but this is what they proposed. The first case, a free zone company is supplying to another free zone company or outside UAE. Then they come under exemption. Second case, free zone company is supplying to mainland person. Let us say in the from designated zone, they are supplying goods to a mainland person who will use his import code. So that means from free zone, if you supply to any mainland company by using import code, that is treated as export from free zone. So it will be exempted. But if you supply to a mainland person who is not using import code, then you will be taxable. Then you will not be a qualifying free zone company. So free zone company having a branch in mainland. So this is one relief they given. So if you can prepare two set of accounts, free zone account separate, the mainland account separate. And if you can demonstrate free zone license is doing only business in the free zone, then you will get zero rating. Same case, mainland company with free zone branch. If you can separate free zone income, mainland income separate, then free zone income will be exempted. So free zone to a mainland group company. So if you earn income from the mainland group company, it will be exempted. But in the free mainland company, whatever supplied will not be treated as an expenditure because you are getting zero rating benefit in the free zone. So this is a synopsis. So just a golden rule, if you are doing any business with any mainland company, you won't be qualified as a free zone company. One more condition they said, once you are qualified free zone, like you are not earning any income from mainland company, for a free zone company, you have to prove a substance. Substance means they have not defined what is substance. Substance generally they have given in, I'm taking example from academic substance regulation. If you have a license in the free zone, it should be managed from UAE. You should have adequate number of employees. You should have adequate resources. The board meeting should happen in UAE. So that means if somebody has a flexi desk in UAE, but the owner sits in India or Europe and there is no staff, then it is very unlikely that you will not get exemption. Very likely that you will not get exemption. Okay, tax groups is again like the question I asked, question asked by many people. We have VAT group. Can it be same as corporate tax group? The answer is no, need not be basically. So what they say, if a company owns 95% of the shares of another company, then only you can have a tax group. That means there should be a holding subsidiary company. I have a license in Dubai, I have a license in Abu Dhabi. I am the 100% owner in both the companies, both the license. So can I treat as a tax group? The answer is no. Tax group is only if you have a holding subsidiary 95% shareholding. So this is how more than 95% if you have, then only you will be able to file one tax return. So the question here is, if you have two licenses, if you group it, what is the advantage? If you don't group it, what is the advantage? Matlab, people ask, I have a license in Abu Dhabi, can I make it a branch or make a 100% subsidiary? Then you can file one group, one return. But there are some advantages. If you file one group return, you will get only exemption 375,000 for one group. But if you have two licenses, you file two separately, you get 375,000 for each. So this is how I explain 1 million. So if you have two companies, basically you file two separate returns. So if you have one company, group company, you will file one return, you get only 375. So practically you will be paying little more tax if you have one group. Okay, one more question is, okay, we are not holding subsidiary, don't we get any benefit? So the tax law, the tax authorities, the government is giving some benefit. If the more than 75% shareholding in both the companies, so if there is any loss in one company, you can set up against another company, even if you are not a group. So example, I have a company in Dubai 100% share and a company in Abu Dhabi 100% share. I make profit in Dubai company and I make a loss in Abu Dhabi company. I can club it and I can transfer loss of Abu Dhabi company to Dubai company. So that I can get that benefit, even if I am not a group company. So how you can create a company? There can be three shareholders, but the condition is there should be common shareholding of 75%. So AB together here 100%. If you see here, AB together 75% here, 75% here. So there will be a qualifying group. Carry forward of losses, I have just explained. I make loss. I am not, profit is taxable. What if I make loss? So the law says if you make loss in the current year, you can carry forward, and whenever you make profit, you set off. The condition is if you make 1 million profit, you can use 750,000 to set off your losses. So 25% you will pay, balance 25% you will be paying tax. So the example qualifying group also, like I said, 75% common ownership. You can carry forward loss of one company to another company and to company which is making profit. You can set off. So I have given an example here. Case one, your profit is 500,000 and another company your profit 1 million. So in this case, you have tax losses. This year you made profit 500,000, you made a loss of 400,000. This out of this 500 million, you can use 75% to set off your losses. So 375,000 I set off against 400,000. So I will still be left with 25,000, which is below 375,000. I will not pay any tax. But where you made a profit of 1 million and you have a brought forward loss of 400,000. So this 750,000 you use to set off this loss, and on the balance you pay tax. So this is about pre-group tax losses, which is a big topic. So this I have to connect again. This is basically you are running a business. After 2 years, one company joins as a group, or one company leaves as a from the group. How the tax losses are adjusted, this is just explained. So this needs little elaboration because of running short of time. I am just skipping with a brief description. Now, how do we prepare ourselves for coming tax regime? These are the preparations you have to do. Try to reduce cash transactions. Payment to related parties, you just review and see how you can basically uh, regularize those transactions. For example, like in the company accounts, owners, children's school fees is booked, his credit card expenses are booked, all those things you have to discontinue. So any expenditure you incurred, there should be proof. There should be proof of delivery. Should be proof of delivery. All the expenses, all the bills you have, basically, uh, you should have a proof. It should be in the name of the company. And major fluctuation from the previous year, they will be questioned. Staff salary is very important. You have a license, you have an employee, but he is working in another company. So those things will be questioned and it won't be allowed. So all these things you have to review. You have 2-3 licenses, but staff visas are in different license. They are working in different places. You have to regularize all that. Withholding tax is withholding tax. If many of you from India, this is something similar to TDS, tax detected at source. In UAE, it is 0% withholding tax, but any payment you make to a foreign person, it will subject to 0% tax. That means you have to declare that you may how much amounts you paid to foreign persons, foreign residents, by showing a 0% withholding tax. Anti-abuse rules is this rule is this basically clause is introduced just to warn the taxpayer. Anything just to avoid tax, if you get into some arrangements, some contracts, just to avoid tax, that will be highly penalized. So, for example, like you realize there's your company is making huge profit, then you enter into a contract with some relative, you pay him like 500,000 consultancy fees, just to reduce profit. These things will not be allowed. So that is why anti-abuse rules. They will look at the timing of the transaction, volume of the transaction, all this, the manner why how it is done. Like you do this contract in December, all these things. Basically, the crux of the matter is don't try to get into artificial things and all for to reduce the profit. So with this, some more clarifications are pending, which is from the free zone company, from the ministry. Uh, these are the clarifications that we are waiting. Who are the qualifying free zones? What will be the depreciation rates? Is there going to be any limitation on partner salary? All that. So once we get these clarifications, maybe we can have one more session.